Hey guys, it's James and I'm back with another video. Today we're going to do a valuation on one of the most popular Dividend Aristocrat stocks, Coca-Cola, or ticker symbol KO. We're going to evaluate this stock with one of my new spreadsheets that I just built here recently. And if you guys want access to this spreadsheet as well as my other spreadsheets, you can head over to Patreon, where you can have access to all of my workbooks. I have 3 workbooks. My main workbook is my future value workbook, where you can determine the future value of your portfolio, as well as some other tabs here. We have our dividend portfolio tracker workbook, as well as a budgeting workbook. But today we are looking at the valuation of Coca-Cola. We're going to evaluate Coca-Cola with the discounted cash flow model, Graham's model, and dividend discount model. So let's go ahead and jump right into it. So what I normally do with my spreadsheets is all of the inputs are going to be in the yellow. So we have a few of the yellow boxes here, and then all of the outputs are going to be in the green. If you would like to follow along yourself with this spreadsheet, you only touch any of the white highlighted boxes in the yellow sections. So first off, where did I get the discounted cash flow model numbers? Well, I head over to macrotrends.net, and over on Coca-Cola's web page, or over on the page, they have all the way, you scroll down to the bottom, and they have annual free cash flow numbers for the past few years. And we took from 2021 to 2012. And these numbers are in figures of millions, so 366 million or 11.3 billion. Went ahead and plugged those into my calculator. And then cash and debt, how much cash on hand and how much total debt does Coca-Cola have? Well, you can find those numbers over on Seeking Alpha under the valuation tab for Coca-Cola. Come down to total cash $13.2 billion, total debt $41.19 billion. Put that into the calculator. And then we have to choose a perpetual growth rate and a discount rate. Now, normally for a perpetual growth rate, that we are saying that this company is going to continue on in the future, on average going to be growing about 1.5% per year until the end of time. So we're going to say about 1.5%, where the overall United States economy grows at about 2, 3, or 4%. So we're not going to say Coca-Cola is going to grow any higher than the United States economy. And then the discount rate, we're going to choose at around 5%. So all of this right here goes into this analysis right here. And I did not hide this, and I just kept this out in the open so you all can see it. Here are the growth, the average growths, the free cash flow growths for Coca-Cola. This is what the cash flows have grown in these years, and that comes to an average growth of about 2.89% cash flow growth per year. Coming over here, what does that look like in the future? Well, about 10 years in the future, this is the type of future cash flows you can expect. And then the terminal value, meaning if the company went off into infinity, this is the type of value you could be putting on Coca-Cola. So what is the present value of all these future free cash flows? Because we know the same amount of money 10 years in the future is not going to be worth the same amount today. So in the present value of 2022, 11.7 billion, the future growth taking from the average growth. At the end of 2022, we're going to expect around $11.7 billion for Coca-Cola. And that is a present value. But we're going to discount the 2023 figures, 12 billion. We're going to discount that to about 11.5 billion with this discount rate, coming down all the way to 2031, and the terminal value, we come to a sum of all future free cash flows, FFCF, of $376 billion, with an equity value adding in the cash and subtracting the debt, we come to an equity value of $348 billion. And over here, this is the final calculation. We simply take the equity value of Coca-Cola and divide it by the outstanding shares, and that's already done for you in the formula. We come to a valuation of about $80 per share, with the current price of it being about $61. But we're not just going to take the discounted cash flow model. Let's take Graham's model. Now, Graham's model is fairly simple. All of the calculation is done for us inside this formula here. All we need is an analyst estimates of the growth rate, what we expect Coca-Cola to grow. Now, they're saying over the short term, Coca-Cola is going to grow anywhere from 9, 10, and 11%. But if we do take a smaller growth rate here, and this growth rate for Graham's model, they're saying over the next 7 to 10 years, what can we expect for the growth for Coca-Cola? I'm going to drop this down to a little bit more of a conservative number, and let's say over the next 7 to 10 years, we're going to expect Coca-Cola to grow about 6% per year over the next 7 to 10 years. And then put in the AAA corporate bond rate, and that today is sitting around 5%. So put in just 5 in that figure, and Graham's model gives us a value of about $26 per share, which is a lot less than Coca-Cola. Let's go ahead and round out this valuation with the dividend discount model. Now, this is a great company to do the dividend discount model on because it has very consistent dividend payouts. It's been paying out a dividend for about 59 years straight. Over on Seeking Alpha's dividend and subtab dividend scorecard, you can see it's paid out 59 years straight, and these are some of the numbers we're going to be using for our dividend discount evaluation. We're going to use the 5-year growth rate of 3.57, and the annual payout of about $1.76 is what they're projecting for 2022. Coming back to our tab here, so in 2021, it was about $1.68 for the entire year of 2021, but if we increase that to the projection for 2022, it does give us a little bit more in our valuation for the dividend discount model. Remember that 5-year dividend growth rate was 3.57%. The risk-free rate or 10-year bond yield is 3.81%. And what is the average annual expected return of the market? We're going to put in around 8%. That gives us a valuation of about $86.18. So averaging these three numbers together, we're going to end up around $64.25. So we're always going to want to apply a margin of safety. So we're going to go ahead and click yes here. And if you're following along, you can click yes or no. If you don't, if you click no, the average valuation is just going to come down here to the final valuation. We're going to click yes, and then you get to choose a margin of safety. We'll play around this with this number and see what we get, but we're going to start with 25 right here. So obviously we know the final valuation, 48, is less than $61. So we right now, currently as it stands, Coca-Cola is very close to a sell. Now, if your margin of safety was maybe a little bit more lenient, say 10%, you get closer to that figure. Let's say it was 5% and you get that $61.04 figure. It's still a sell, but if you didn't apply a margin of safety at all, you can see that Coca-Cola would be in that buy state. Now, I'm going to be doing this with the rest of the Dividend Aristocrat stocks. So if you would like to follow along in this series, and over on my watch list, I put together a watch list of these Dividend Aristocrat stocks. And then again, like I said in my previous, at the beginning of the video, all the yellows are my inputs and the greens are my outputs. And today I did Coca-Cola. November 12th, 2022. The current valuation that we are using for Coca-Cola is $48.19. Today's price is $61, so currently it is sitting overpriced. But over here, I do have some analysts rating, scraping from the web from finviz.com, and analysts are saying it is around a 2.1. So 2.1 in my book is very close to a soft buy. It is kind of in that holding category, which would kind of make sense if you changed some of these numbers very slightly. If you expected the growth rate to be a little bit higher, remember we had that 9, 10, 11%, that would put Graham's model coming up to 34 with a margin of safety at 25%, that would bring our valuation up to 50. If we had a lower margin of safety, you can see as we play around with these numbers, we are getting very close to the current price of Coca-Cola, which would make sense to the analysts' ratings of that 2.1. Anything 2.0 and below on this list is going to highlight green. Anything less than 1 is going to highlight dark green, which is what analysts are predicting as a light green going to be a buy and a dark green going to be a strong buy. So you can see some of these Dividend Aristocrats analysts are highlighting as a soft buy. Lindy, Next Era Energy, Walmart, and S&P Global Incorporated. So those might be on our list to do next. Let me know what you guys thought of this video. If you guys want access to this spreadsheet, head over to Patreon, sign up, and you can play along with this calculator. With that, thanks for watching.